Most people believe the gap between the rich and the poor is built on a foundation of grand ceremonies, massive real estate deals, secret offshore accounts, or inherited oil fields. But if you look closer, at the granular level of a bank statement, you see something much more surgical. Wealth isn't just about what you make, it's about what you've been convinced to surrender. There is a specific category of stuff designed to look like progress while acting as an anchor. These are the items that keep the middle class in a state of perpetual motion, running faster and faster just to stay in the exact same place. Today, we are looking at the 10 things the wealthy have quietly scrubbed from their lives and why the system is desperate for you to keep buying them. 1. The high-interest mirage. We begin with the most effective trap ever devised, the low monthly payment. To a person struggling to get by, a price tag of $1,200 is a barrier, but $49 a month? That feels like a gift. This is the buy now, pay later economy. Rich people look at the total cost of capital. Poor people look at the impact on their weekly cash flow. When you buy a television on a payment plan, you aren't just buying glass and plastic. You are buying a debt obligation. You are trading your future hours of labor for a depreciating asset that will be worth zero by the time the final payment clears. The wealthy avoid interest on consumer goods like a biological hazard. If they can't buy it twice in cash, they don't buy it at all. 2. The brand name tax. There is a specific type of clothing that screams, "I have money," and it usually features a giant logo. It's a walking billboard. In the world of true wealth, this is known as the insecurity tax. Ultra-high net worth individuals prioritize fabric quality and fit, the quiet luxury of Pima cotton or bespoke tailoring, over the visible logo of a fashion house. Why? Because the logo is marketed to the person who wants to look like they belong to a class they haven't reached yet. The rich don't pay companies for the privilege of advertising for them. They buy the utility, not the status. 3. The new car smell. The moment a brand new mid-range SUV leaves the dealership lot, it loses roughly 10 to 15% of its value. By the end of the first year, that's 20%. To a wealthy individual, a car is a tool for transportation or a collectible asset. Buying a brand new standard car is essentially lighting $5,000 on fire for the smell of fresh upholstery. The poor and middle class often view a car as a trophy of their hard work. The rich view the depreciation curve. They would rather buy a 2-year-old certified pre-owned vehicle where someone else has already paid the newness tax, allowing their own capital to stay invested in the market. 4. The lottery ticket of hope. State-run lotteries are often called a tax on people who are bad at math. Statistically, you are more likely to be struck by lightning while being eaten by a shark than you are to hit the Powerball. Yet billions are spent annually by those in the lowest income brackets. The rich don't gamble on hope with such abysmal odds. They understand that wealth is a game of probabilities and compounding. A lottery ticket is a guaranteed loss disguised as a dream. The rich prefer to be the house, not the player. 5. The convenience markup. Walk into a gas station and look at the price of a 1-liter bottle of water. It's often priced at a 2,000% markup compared to what you pay at the tap or in bulk. Poor people pay for convenience because they are often time poor, rushing between jobs, or overwhelmed by daily logistics. Rich people, however, are obsessive about systems. They buy in bulk, they plan ahead, and they refuse to pay a premium for a lack of organization. They realize that $5 wasted every day on convenience is $150 a month, which over 30 years at an 8% return is nearly $200,000. That's the cost of a convenience store soda. 6. Extended warranties. Would you like to protect your purchase for an extra $89? The math behind extended warranties is simple. The insurance company knows the product probably won't break, and if it does, the cost to fix it is less than the premiums they collect. The wealthy self-insure.
They keep an emergency fund that covers the cost of a broken washing machine or a cracked phone screen. They refuse to pay a third party to manage a risk they can afford to take themselves. 7. Impulse upgrades. The tech cycle is a treadmill. Every 12 months, a slightly faster phone with a slightly better camera is released. The poor are often the first in line, driven by the psychological need to stay current. The wealthy wait. They use their hardware until the cost of repair exceeds the value of the device. They understand that a smartphone is a tool, and if the current tool still performs the job, an upgrade is just an unnecessary expense that pulls money away from income-producing assets. 8. Luxury services they can do themselves. There is a massive industry built on doing basic things for people who feel too busy. Food delivery apps are the primary culprit. Paying $15 in fees and tips to have a $12 burrito delivered is a mathematical disaster. The wealthy are often surprisingly frugal about these types of operational costs. Unless their hourly earning rate is so high that spending 30 minutes on a task is a literal loss of thousands of dollars, they don't outsource the basics. They guard their leakage. 9. Maintenance-happy liabilities. The wealthy avoid things that eat, not literally, but figuratively. A boat, a high-end swimming pool in a cold climate, or a second home that isn't being rented out. These are liabilities that require constant maintenance, insurance, and taxes. While the middle class sees a boat as a sign of making it, the rich see it as a hole in the water into which you throw money. If they want to be on a boat, they rent one. They own assets that pay them. They rent the toys that cost them. 10. The cost of being late. Perhaps the most expensive thing poor people buy is time they didn't manage. Overdraft fees, late payment penalties, and high-interest payday loans. These aren't products in the traditional sense, but they are things people pay for. In the United States alone, banks rake in billions in overdraft fees from the people who can least afford them. The wealthy avoid these costs not just because they have money in the bank, but because they have systems, auto-pay, calendars, and financial buffers. Being disorganized is one of the most expensive hobbies a person can have. The hidden mechanics. Why does this happen? It isn't because one group is smarter than the other. It's because the global economy is a giant filter. On one side, you have corporations spending billions on neuromarketing to trigger your limbic system, the part of your brain that wants the shiny object now. On the other side, you have the prefrontal cortex, the rational part that plans for 10 years from now. The system is designed to bypass your logic and talk directly to your lizard brain. It wants you to feel like you deserve the luxury car because your job is hard. It wants you to feel like the brand name shoes will give you the respect you're missing at work. The wealthy have simply learned to recognize the itch of a marketing trap and ignore it. They realize that the feeling of buying is a temporary dopamine spike, but the feeling of owning your time is a permanent state of freedom. The broader implications. If everyone stopped buying the logos, the new cars they can't afford, and the convenience water, the economy as we know it would likely collapse. Our modern world is built on the spend of the middle class. Your debt is someone else's asset. Your interest payment is a billionaire's dividend. When you look at your bank account, you have to ask yourself, are you building your own fortress, or are you just providing the bricks for someone else's? The math is uncomfortable because it suggests that our struggles are, in part, financed by our own desires. It suggests that the American dream has been repackaged as a series of monthly subscriptions. So, we are left with a final thought. If wealth isn't about the things you can show off, and if the most successful people are the ones who look the most ordinary, what exactly have you been working so hard to prove?